Welcome. IndiGo's Aviation reported numbers post-market hours on Friday. The numbers beat street expectations, but we went into the earnings rather euphoric. We have with us Pieter Elbers, CEO of IndiGo's Aviation, in conversation, breaking down those numbers for us and sharing the outlook for the company. Hi, Peter. Thank you for taking out the time to talk with us. To begin with, we of course heard the conference call by your CFO as well, but just highlight for us the key takeaways from this quarter. Revenues have done well, but profitability has been impacted this quarter. You want to walk us through the key takeaways?
Yeah, thank you. Hi, Samina, good evening, and thanks for having me. What we have seen for this quarter is actually a continuation of what we have seen in the last couple of quarters, a very solid and healthy growth with a 18% growth in our net income, totaling 202.5 billion rupees. And with that, a very solid profit margin of 14%, which comes down to 2,700 crores of profit. So in fact, this is a continuation of what we have been doing for the last 6 quarters. So this is the 7th consecutive quarter now. We're posting some good and very solid results against a market situation which is still positive from a demand outlook, but yet is being confronted with some challenges when it comes to rising fuel costs and some of the global inflationary pressures.
Peter, thanks for that. Just a quick one. While it's been a good quarter, and of course you've done as well as you'd expected to do, can you break that profit number for us? Because there is a decline on profitability when you look at the year-on-year number. What's the reason for that?
Yeah, well, year on year, indeed, there's some variation. But I'd like to highlight actually that last year, Q1 was a very specific year with some very specific dynamics in terms of frictions between capacity and demand, resulting eventually into a very high profit number. If I compare this quarter to the last quarter, which is not totally fair because there are always seasonal effects, but we see actually a very solid and even improved profit situation. So year over year, yeah, there's some dynamics, but going forward and looking to this quarter itself, actually, we see a profit which is robust. Looking at that profit situation, clearly, again, the headwinds we saw on some rising fuel costs, forex cost, and even the aircraft grounding, if we take these factors into consideration, we feel very confident about these results, which we have posted here today itself.
I mean, you are the best performing airline in the world, if we had to say that. But looking into FY25, Peter, give me a sense of what sort of expectation can the street have in terms of revenue growth, double-digit growth sustainable into the rest of the year, and also profitability. Is this the sort of profitability range you should be maintaining as we look ahead?
Well, thank you for your kind words on our sort of global ranking. I'm not sure if that's the case. What I do see, though, is that airlines in different parts of the world are being confronted with results significantly with a different magnitude than they had prior. So if we look to that sort of global setting, we're actually quite pleased with the results which we published today here. We're not providing any profitability guidance or indications for the entire year. What we have done is a capacity guidance of early double digits for the entire year. So that's what we have put in the outlook at the beginning of the year, and we maintain that capacity guidance of the early double digits for the entire year.
Okay, let's talk about margins, Peter. Where do margins stand, and what sort of range of margins do you aim to hold at for the rest of FY25?
Yeah, well, today's margin is 14%. That's what we have published for this first quarter, which again we have qualified as a very solid margin. We have not given any guidance on margins for the entire year.
Right. What is your market share in the domestic market, Peter?
Well, the market share goes up and down to some extent, but it's in the range of 60-ish%.
Right. And in terms of the revenue breakdown, how much does international and domestic contribute to, if you can break that down for us and tell us what sort of growth you're working with? Because if you're adding fleet and capacity, I'm assuming there is enough demand to absorb that capacity expansion, right?
Yeah, well, if we look to our capacity allocation, and let me take that angle rather than the revenue allocation. If we look to our capacity allocation, we had a 27% allocation on the international network, and the remaining part, obviously, on the domestic network. We have earlier given some guidance and objective to move in the years ahead towards 30%. Clearly, with our ambitions going forward, with the wide bodies all the way into 27, that percentage will further grow. And we have observed and shared earlier that we do believe that the Indian market, when it comes to international travel, is even more underpenetrated than the domestic market. So you will see a sort of gradual, stronger growth on the international side than we have seen on the domestic side. Having said that, the very basis, a very foundation really of IndiGo will remain our strong domestic network. So we continue to expand that. If we compare quarter over quarter last year, you can see that we have added a total of 17 destinations, 10 on the domestic side and 7 on the international side. I think that in itself speaks to our ambition to continue to really live up to our promise, India by IndiGo.
Right. You want to tell us, in terms of looking ahead, there are lots and lots of challenges here that your industry has been faced with. So, be it higher airport fees, management cost, ATF prices. How do you plan to navigate this and mitigate these risks?
Yeah, well, the airline industry, and thanks for pointing that out. The airline industry, by definition, is an industry where one always has to be on its toes, and I think IndiGo has demonstrated for the past 18 years, and will turn 18 in just a little over a week from today. IndiGo has demonstrated in all these years to be able to be on its toes, to serve its customers, and to make sure that there's always a healthy gap between the cost of doing business and the revenues. With that, clearly some of the higher costs which we are confronted with airport charges, with rising fuel costs, will find its way into airfares. But IndiGo lives up to its promise and its commitment, keeping affordable fares for our customers. And the fact that we have average yield levels this quarter, which are pretty similar to that of last year's same quarter, demonstrate that. So there's two angles to that. Last quarter had a yield level which was significantly up compared to the year before. Now we saw a more stable environment to that respect, and we continue to find ways and means to keep our cost leadership. That's incredibly important for IndiGo, and with that cost leadership, we'll continue to offer affordable fares to our customers.
Peter, I know you're not giving on any sort of guidance, but you did indicate that the environment hopefully gets a lot more stable as we look at it. So yields could remain in this range. Is that a fair expectation? And you don't need to quantify this for me, but just give me a sense of what you're picking up in terms of industry dynamics as we look ahead.
Yeah. What we have guided for the second quarter, and we have not given any further guidance than the second quarter. So whatever guidance I give on that revenue environment for the second quarter, we expect that to be stable. And the first indications we see in the month of July are there. It's a bit difficult to precisely quantify what's the effect in the first quarter. We have seen, for example, of the elections and some of the high temperatures. We have seen what is exactly the effect on traffic. But overall, we're confident that the second quarter will have a similar revenue environment as compared to the first quarter.
Okay, that's good to hear. Also, there was a significant jump in other income year on year, over 40%. You want to tell us one bit behind that?
Well, we have different dynamics in the revenue side. We have also finalized some of our agreements with the OEMs when it came to some of the capacity shortages and delays and supply chain challenges we're having. And as you know, we are confronted with a very significant number of aircraft groundings awaiting supply chain issues. And we have been closing some of the arrangements with the OEMs in the past quarter.
Expensive have also gone up for the quarter. Is that largely operational?
Well, it's a mixture. It's partly operational. You've seen the increase in the fuel price. It's partly some of the charges we're having. And it's also, of course, partly some of the costs we're incurring because of all the mitigating measures we've been taking in order to live up to our capacity guidance, despite the groundings of airplanes which we're having.
I think another strong parameter that stood out for IndiGo was of course, operationally, the available seat per kilometer. That's seen an increase too. The outlook on that, would you be able to give me a sense of what FY25 would look like on that front, the outlook on ASK?
Yeah, the capacity guidance I just gave for the entire year in the early double digit is exactly on ASKs.
Okay. And also, you're sitting on a pretty significant cash balance, Peter. Any plans on that? You want to walk us through what the position of cash is and if you've got any plans to utilize that cash?
We that solid cash position has really helped us during COVID. I think where some other airlines had challenges, our cash balance really helped us to come through these difficult times. So it's good for us in a business as volatile as the aviation business is to have a cash balance like that. And of course, we are reviewing, and I think we've taken some steps on that already. We are reviewing some of our fleet financing policies and probably investigate some further diversification from what we have today, and some of those cash could be there. In addition to that, I think we have embarked on really an ambitious plan post-COVID to digitize the airline, and we're digitizing in basically multiple ways. One is whatever we do for our customers, we will be launching our new web and app opportunities actually in 2 weeks from now with the outside world and with our customers. We are digitizing a lot of the internal processes. India is a very digital savvy country, so we feel that for our customers, we should really step up whatever we do in the digital field. So we have a very ambitious program on that, and that really is also to make the airline scalable. Today we have 2,000 daily flights. We expect to double in size by the end of the decade. And for that, obviously, digitization is an incredible important part.
In fact, I think that should help operationally as well, right? So better utilization of cash could, of course, ensure that operational performance only improves for the rest of F525. You've added significant passenger aircrafts during the quarter. Is that the kind of pace you're looking to grow at? What is the plan for FY25? How many more aircrafts are you planning to add to the fleet?
Yeah, that of course depends on what's the exact delivery schedule of Airbus, and there we await some of the updates from Airbus side. I think earlier we have announced in the range of 50-ish, one plane a week for the entire year. So we still keep that. It could be a few more, a few less, but that's the kind of range. One plane coming in every week for the year ahead.
Right. Also,
And
very large.
you mentioned, Samina, you mentioned the operational part of it, and thank you for doing that. We have recently introduced what we call 6E Sky. That's a bot helping our customers to even rebook themselves, to do a lot of self-servicing, and especially in times where we have disruptions, and we took a lot of lessons from last year in the winter season and the monsoon season, and we really see that some of these digital apps are helping us to deal with the quantity of people we're flying on a daily basis. And today we're an airline serving over 3 lakh customers a day. So, in case of disruptions by fog or monsoon or other aspects, call centers are overloaded. And at that point in time, we really want our customers to be able to sort of self-rebook them. And digital investments in that field are really paying off.
Yeah, and I guess that eventually will translate into numbers too. Peter, very lastly, while it's been a solid quarter, how optimistic, buoyant are you feeling for the rest of the year, for the company, for the industry? Would be great to get some perspective on a qualifiable note.
Yeah, again, we're not giving any sort of profitability guidance for there. What we do is we maintain our capacity guidance. So we have put out the capacity guidance in the early double-digit numbers at the beginning of the year. We maintain that capacity guidance. We maintain our long-term objective to double by the end of the decade. We maintain all our initiatives working towards that. And we have recently launched a whole new set of initiatives, one of them being introducing the business product on the nation's busiest and business routes. So you could take that as a sign of confidence in the market going forward. And yes, there's going to be quarterly variations up and down, but the direction for the Indian aviation for us is very, very clearly moving ahead. And the under-penetration of aviation in India compared to other countries of the world, in combination with the economic growth, makes us feel very confident on the fact that this one plane a week coming in for the years ahead is really important. So we continue to build our capacity, we continue to build our customer experience, we add very important parts like we have seen the business product. We're adding new features for our customers. We're testing some in-flight entertainment. We've introduced a seating app for women travelers who are traveling alone, which is actually received extremely well by the market. So we keep adding these aspects, basis that confidence in the market going forward.
Right. Peter, this is a last question, and this is slightly beyond earnings, right? We've talked extensively about your core business. Is there any other non-core business that the company is now focusing on, backward integration, forward integration, that could eventually, in the medium term, so the next 2 to 3 years, become revenue accretive?
Maybe I highlight here, and there's different initiatives we have launched, and we're in the process of further finalizing that. We have launched IndiGo Ventures, where we will cooperate and collaborate with new companies. More tangible at this point in time is whatever we have done on the cargo side. So we basically have now 3 freighters in operation. We are working together with some of the companies. We see here that the entire e-commerce in India is growing, and our freighters are providing a good proposition for that. That is also helping up to gear up towards 27 when the wide bodies will be coming in. So, we are not per se diversifying, but I would say we are enriching our revenue flow with some of these new initiatives going forward.
Thank you, Peter. Exciting times. Good luck and congratulations. We'll hopefully see you soon again.